Morning, everybody. This is Tim Melvin coming to you from down here in Central Florida. Going to be a beautiful day down here, mid-70s, sunny. Had a little rain yesterday, but we were all inside doing Super Bowl stuff, and so it didn't really matter. But it's going to be a beautiful week down here. Speaking of the Super Bowl, I didn't watch a lot of NFL this year. Had nothing to do with the player strikes or anything like that. I just found the game boring. 3 out of every 4 plays had a penalty flag. It was just crazy trying to watch the NFL the last couple of years, so I've kind of stopped. I pay more attention now to the college game where, as somebody said yesterday, the players just seem to try harder and care more than some of the guys in the NFL. I was watching a game. Team was losing like 31-7 in the fourth quarter, and the trailing team attacked the leading team, just a quarterback, and sacked him, and the guy did a dance. He was losing by 24 points, and he's dancing in joy because he sacked the quarterback. I was kind of done with the game after that, but I did watch the Super Bowl. And what a game. Everything you could want for, right? Great storylines, 40-year-old Tom Brady. He thrown for 550-some yards, put on quite a display. Then you had the Nick Foles comeback story. Lots of scoring, almost no penalties, almost no defense, everything you want in a football game. Congratulations to the Philadelphia Eagles. It was a fantastic game. And Philadelphia, sorry about the city and the light poles and all the fires and all that, but that was kind of predictable. It was just whether it was going to be a happy riot or a sad riot last night in Philadelphia. At least they got a happy riot. So anyway, speaking of happy riots, we do have a pullback in the stock market that started last week, driven by interest rate fears. And, I don't want to scare anybody or set off, Armageddon fears or anything like that, but we are now 5% off the all-time highs this morning. I know that's terrifying for a lot of folks, but hang tight, guys. This is not the end of the world. Yeah, we're seeing some selling. It's actually pretty healthy. I'm happy to see it. We may be able to get some of our bonus banks into play a little bit later this week, as long as we don't get some V-shaped rebound. The buy list should grow out by another few names by Friday. So all in all, a declining market is real positive for us. We take a very long-term view of things. We're looking 4, 5, 6 years down the road. We're looking at some of these smaller, underperforming banks like an acquirer would, and I'm looking at these going, hey, they're on sale here. And it's reasonable to assume that if the decline continues, we'll see the activists start to get active again. And that'll create some interesting situations for us as bank stock investors as well. Now, the market sell-off is driven by interest rate fears, and it's we've just started talking about it. We said most of the real fear and risk to this market is geopolitical in nature, but the Fed going too far too fast is a deep concern. That will scare corporate America. It will make the cost of borrowing money a lot higher and just generally put the brakes on some of the economic growth and certainly on stock prices as fixed income investments might become a viable alternative once again. Now, the economy appears to be growing faster than anybody thought. The Atlanta Fed model, which it's been reasonably accurate, they're saying 5.25% growth for fourth quarter 2018. Now, folks, throughout my career, a rule of thumb has been is that the 10-year should be, somewhere right around the growth rate. That's a huge bump up from the current 2.85%. That type of move in the bond market would destroy stock prices. So we're going to be watching interest rates. We're going to be watching language out of the Fed under new chair Jerome Powell. Keep in mind, he has a private equity background. He understands the relationship between asset prices and interest rates, probably better than any Fed chair that we've had sitting in that office for some time. So it's going to be interesting to see exactly how he approaches what appears to be a new problem that he's inherited, and that is the stock market is scared to death of interest rates going higher. We always knew when the punch bowl was taken away, the party might end. Maybe that's happening. I'd love to see it. It's investor's prayer. Please, God, give me one more 30% decline, and I promise not to piss away the profits this time. So we'll see what happens. Stock market also is no longer it's not really a carry trade anymore. The stock market is now yielding less than the 10-year, which has been something the bulls have talked about for quite some time, that, you could actually get a higher dividend yield in the stock market than you could in the 10-year treasury. That's no longer the case. We'll see if that spurs some of the old timers to sell a little bit more. So as far as our bank stocks, Earnings have been coming in, not much to complain about, folks. We're seeing good loan growth, we're seeing solid deposit growth, and their credit conditions are about as good as they could possibly be. So we're staying the course. None of our banks are egregiously overvalued. Our average price to book value is still somewhere right around that 1.2 mark, and the average stock on our buy list is less than 90% of tangible book value. So we're pretty happy with the portfolio that we have. We do have lots of cash. We've got about 31%. And that's just because we've had banks taken over. We didn't like the acquiring banks, so we went ahead and sold them. And we have not yet found anything to replace them with. Not really that much of a market timing call on my part. And we do have a tail hedge in place. So if things continue to go down, we have some options down there that will just explode in value in a rapidly declining market. So that we're pretty well positioned. We've got a bunch of bank stocks that we love. We've got cash to take advantage of any new opportunities that are created, and we've got a tail hedge in place in case disaster strikes. I like where we are as we enter February of 2018, and I think we're going to have a fantastic year in the banking on profits portfolio with the bonus stocks and with the focus stocks in the community bank stock investor. So hang on, folks. This is going to be fun. All right. Now, last week was a huge announcement, and I think everybody's underplaying it. Warren Buffett, Jeff Bezos, and Jamie Dimon got together and said, enough on healthcare. We're putting our teams together. We're going to work on a solution. We have to be able to deliver viable, affordable healthcare to our employees. Now, the common thing is, oh, they're going to make a single payer. They're just doing this to make money. It's not going to work. They're just going to form a buyer's co-op. Guys, yeah, they're doing it to make money. Not so much to make money as to save money. You're never going to see this packaged up and sold off as a new health insurance company. They may allow other people to join and partner with them, but this is really going to be about finding ways to deliver affordable health care to between the three of them, they have over 1 million employees. Now, one of my more, I'd call them left-wing oriented friends, oh, this is just, they're going to deliver subpar health care to the employees. And these are three of the smartest guys in the country. Okay, certainly three of the best businessmen. They understand that in order to attract and retain talent, you have to have world-class benefits, especially on the healthcare front. But I actually think this is going to break through. They've kind of looked at this and said, all right, the insurance companies tried it, the government tried it, none of you guys got it right. We've done pretty good fixing stuff, so now we're going to take a shot at it. In an article I wrote for Monday Morning, I said the capitalists are coming for healthcare. This could be a breakthrough, along with things like the CVS-Aetna merger, that really start to change healthcare. And by change, make the delivery system better and more affordable for everybody. We'll keep an eye on that. Jason Zweig did a column talking about this deal, and he says, hey, where are the saviors for the investment management industry? If you look out there for the individual, and even for some of the large foundations and corporations with lots of cash, when you approach Wall Street, it's confusing. There's all sorts of options, and nobody's really understanding or explaining the risks. Most money managers are underperforming. It's just very difficult to find quality investment management services at a reasonable price. It's absolute insanity. And by the way, the Jason Zweig column ran in the Weekend Wall Street Journal. Please go read it. He writes about all this much better than I'll ever be able to. I read his column every week, and you should as well. He's also on Facebook and Twitter. You can follow him there. He writes just absolutely informative, wonderful articles about the market and investing. Now, I've known this to be true for some time. I was a broker, as you guys know, for 25 years, and you'd see a lot of products that came down and just like, my God, whose idea was this? Structured products where, yeah, you got a great interest rate, but if anything went wrong, you lost 30 or 40% of your principal. Non-traded REITs where it's impossible to tell what the property's worth. They're very difficult to sell, and the fees are absolutely outrageous. And, annuities with those never-ending fee streams where the broker's getting 7, 8, 9, 10% of your money right off the top. Horrible proposition, by the way. I'm right there with Mr. Fisher that you should never, ever buy an annuity. I can hardly think of any any situation where an annuity absolutely makes sense. Now, this is the point where I should probably go back and recut that and re-edit the sneeze out of there, but I don't know how to do that, so we're just going to leave it in and roll with it. So anyway, you got to wonder, where is the program for the average individual investor that makes sense, delivers quality returns, and does so at a reasonable price? It's 13F season, and as you know, I go through those, all of them as they come out. I don't read them all, but I want to see who's filing what. But I do randomly click on them from time to time just to see who some of these firms are and what they're doing with their investors' money. And guys, there's a lot of people out there paying 1%, 2% for what's basically just closet indexing. And one of the sites I use is Whale Wisdom, and they rank these money managers based on performance. I got to tell you, the average money manager's not doing much better than the S&P, but they sure are getting paid pretty well. They got nice offices, big buildings, nice cars, and that money's coming right out of your pocket as an investor. I think it might make more sense for more folks to get into something like the small community banks that we've done on Banking on Profits, where you can keep your costs reasonable and the profits are fantastic and allow you as an individual to actually beat the market over time. But that's just me. What do I know? We've just been doing a fantastic job of this with the newsletters for the last 4 years, and in real life community bank stocks as a broker, did it for the better part of 2 decades. So why listen to me? Go on, pay the 1% and 2% to these guys who are going to earn you the market rate of return minus fees at best most of the time. So it's the Money Show in Orlando this week. Speaking of high fees and poor performance, I love the Money Show. First off, a lot of my old friends will be there, and there'll be some folks speaking that I do actually really enjoy hearing. Bob Lang will be speaking. He's always interesting and entertaining. Always love to see and hear Louis Navalier talk about stocks. I mean, Louis and I are day and night, but he sure does have a fantastic long-term track record, and he's also my checkpoint on the economy. I know that I tend to run a little pessimistic, whereas he tends to run a much more optimistic. So just kind of getting his viewpoint on the economy and comparing it to mine and see where I might be off base has been a very valuable exercise over the years. So anyway, we'll have dinner with some folks. We'll go around. The big thing that I like about the Money Show is the exhibit hall. I don't care about the exhibits, but they give away pens and bag clips and even staplers. And it's my office supply shopping trip for the year. Every February, hit up the Orlando Money Show, come away with a little bag full of swag, and don't have to go to the office supply store for the entire year. So I'll be down. My walk around day is going to be probably Friday. I'll get down there, walk around, fill my little bag. I'll be in and out for dinner on the other days. But my big day, if you're going to be at the Orlando Money Show, and if you happen to be there, I'll be down walking around, checking things out, and filling my bag this coming Friday. So, football's over. That was it. Super Bowl, as much fun as that was to watch. If I was still living up north, I'd be looking at the long, long, cold winter ahead with no sports except for the brief flash of the Daytona 500 in mid-February and then the actual NCAA tournament itself in March. Nothing happening until April when baseball finally starts again. Of course, I live in Florida, so it's actually only a couple weeks before spring training games start. Not sure I'll get over to Sarasota because that usually involves, I want to go over for the whole weekend. I'm not sure we can carve that block of time out. Don't get me wrong, I'm going to try. It's just a question whether or not I win the argument. Okay, but I will get over. The Orioles are playing the Tigers on March 19th, right down the street in Lakeland. That's about 25 miles away. And of course, the Braves are, they're 10 miles from my house over at Disney Wide World of Sports. And I see that the Cardinals are coming in. The Astros will be there. The Mets will be there a couple times. So I'm I will be over to 3 or 4 of the Braves spring training games. They're an exciting young team. That have some extraordinary new talent. So that'll be fun to watch. Not going to make me a Braves fan, but I'll get over to watch a few games because it is Major League Baseball in February. So that'll be pretty exciting. Now, on the reading front, been a lot going on. Didn't really get to the recreational reading last week. The Preston the Child latest entry, the Pendergast series is out. That's a fantastic series. If you're not reading it, you should be. Tech requires a little more thought than your average recreational reading because the plots are fairly complex. But they are a fantastic, fun read. Mark Stone is one of my new favorites. The guy has got 2 series going, one called Coastal Justice, one called the Cross and Anchor series, and he kind of cross-weaves the characters in one book. Fantastic stories, fun to read, well-written, all set, of course, down here in sunny Florida. The Pope of Palm Beach, the new Tim Dorsey and the Surge Storms, okay, they're just funny. That's all. And they have lots of obscure bits of Florida history and Florida authors. And just, again, if you haven't read them, they're very dark sense of humor. but I like them. And you actually walk away knowing some stuff about Florida and history that you didn't know before you sat down with the book. And I guarantee you, you'll laugh out loud 4 or 5 times at a minimum per book. So anyway, the new one, The Pope of Palm Beach, was out. It was just as much fun as all the other books in the series. Don Lee McKenna's latest entry into the Forgotten Coast series, that was out. Again, fantastic series, great books, great characters. You actually care about the people in the books and look forward to the next one. That was out this last week. I've already read it. It's pretty good. We're continuing with the nonfiction project. Just about done with super forecasting. It was okay. So many people have told me to read that book, and I don't get it. I'm just not a believer in the power of forecasting. And while there's some interesting stat and data, information on data collection and how to make forecasts, wasn't life changing by any stretch of the imagination. But I'll leave it to you to decide. I give it about a solid C. Next up, I'm going back to biographies because I enjoy those more. I feel like I learn more. And we're going to go to Ron Chernow's Washington, A Life. That's been very favorably reviewed. I've read Hamilton. I've read Grant. So now we're going to go on. We're going to do Washington. Like those two. I'm sure I'll like this one as well. So anyway, that's all I've got down here in Central Florida for this week. I'm flying up tomorrow. It's going to be 70, 80 degrees down here all week. So naturally, I'm flying up to meet my son-in-law in Baltimore, where there's a chance of snow on Wednesday. But then I'll be hightailing it back here to hit the money show at the back half of the week here in Orlando. So markets are in declining right now. Prices are falling. Last time I looked over my shoulder, the Dow was off a couple hundred points. We're down 5% off the all-time highs. All this can do for us, folks, is set up a buying opportunity. There's absolutely no reason to panic or flush out our positions. We're going to stay the course and look for new opportunities. Have a great week.